Copper prices have generally been consolidating during January and February, but is there a wider breakout on the way? Welcome to Zenfinex's YouTube channel. My name is Connor and I'm the Senior Market Analyst at the company. I regularly provide videos on various different markets, and today I'm going to be covering a market that does not seem to get the attention it deserves. That is the copper market, which had a remarkable 2021, and I'm going to provide an update to my previous copper forecast. Enjoy. So if you are a regular watcher of my copper videos, then you can skip this first part as it's really just an intro into what copper is. But for those who are unaware, as it may be the first time you're looking at copper, it's a very versatile commodity with a wide range of applications. Now, the most common are its importance to the electrical power industry, as well as electronic product manufacturing and the production of industrial machinery as well. It's just because it's an efficient conductor of electricity and heat, and copper is also used for many other things like construction projects, transportation vehicles, and also cookware as well. Now, one of the most important factors I like to refer to is how copper is seen as a leading economic factor or indicator. This essentially means that if demand for copper is increasing, then it can be a sign that production is ramping up, and therefore so is global GDP. Now, the correlation between world trade and GDP and copper prices is the reason that people call it Dr. Copper. Now, looking at the demand outlook for now, sorry if I pronounce this wrong, but Antofagasta, which is a mining company, I think in Chile, their chief executive says demand is forecasted to grow at a rate of 2.5 to 3% this year. This is a slower pace than 2021, but it's still a high rate of demand, and there are concerns that the increase in production is not going to be able to cover this, and as a result, copper prices are expected to continue their grind to the upside for at least the first half of this year. Looking at supply, in our previous copper forecast, I spoke about how Capital Economics expects the global copper market to enter a surplus of around 200,000 tonnes this year after 4 years of deficits. Yes, there is evidence that production is ramping up. However, there are now many factors which could offset this increase in production, such as COVID, supply constraints, water restrictions, and more importantly now, political instability. Now, it's likely that you've heard about the Russia and Ukraine tensions. If not, I'm not sure where you've been. It's been causing a real shake-up in financial markets, whether you are someone who believes the tensions will escalate or not. The uncertainty is likely to loom over the markets in the next coming weeks and months. There is debate on how this affects the copper market. For now, prices are holding strong. However, this could change if Russia do actually invade Ukraine. Does it affect economic outlook, economic prospects globally? And can we see a fall in copper prices if Russia actually do invade Ukraine? As a whole, right now though, the outlook for copper does still remain neutral to positive. Prices are expected to consolidate in the short term, but the threat of a wider breakout grows stronger by the day. Make sure you keep in touch with the Russia-Ukraine tensions to see if this can be the catalyst for a breakout. Let's take a look at that chart. Looking at the chart for copper prices for the next coming weeks and months, and as you can see, this remarkable run that we've really had since 2020 is stalling a bit. The market structure for anyone who likes to mark sort of higher highs, higher lows is quite difficult at the moment because it's making quite a random set of highs and lows. So really what we see is we see the market actually trading in this sort of range, and that's between 3.9 and around 4.9. So these are ranges for anyone trading copper at the moment. This is the extreme range, and as you can see, prices have been trading just in between that. Now, the price action that we've seen at the start of this year hasn't been particularly great. I mentioned in my previous forecast video I expected prices to fall. They're pretty much unchanged, they're grinding to the upside, and as we know, there are more factors now based on the fundamentals which we could see copper prices actually increase in price. So the main play really for me is I want to see a breakout, of course, either side of this high or of this low. And the reason is because since the range was formed back in May 2021, above the highs and below the lows, we're collecting what's called liquidity, and we've actually got liquidity on the top side here, which I've marked here just by the dollar sign, which is a sign of liquidity, and we have liquidity here as well. Now, the reason I say we have liquidity is if you were someone who was trading the markets and you thought you wanted to sell copper in the long term, you're likely to have your stop loss just sitting above all of this, these highs here basically. And also if you're someone who thought I want to trade copper prices, I want to buy them as soon as they reach these highs, you have lots of buy stops here as well. And the big players know that. And what they tend to do is get a situation where the price just kind of comes up and wicks into this level, and then we'll see a big drop, or alternatively exactly the same for the downside. Now for the downside play, what I like as well, which I marked in a previous video, is we do actually have this imbalance here. I mark that as imbalance for you so it's nice and clear back to the daily chart. So what we could actually see, let's make that a bit clearer. There we go. So what I'd like to see for copper prices is to make maybe the tensions in Ukraine and Russia to cause a move into this level that we have here, and wick below this level, but also actually trade into this imbalance area. From here, I expect prices, maybe if we want to look at the 50% of this imbalance with our stop losses just sitting below this 3.4 level, which I see really as the floor of the market. If we break below these lows down here, then I can see copper being widely bearish. If we take profit maybe around this 4.9 level, which is around a 3.5 risk reward trade, I know it's quite a lot of a drop to happen, but alternatively, you may just want to play in these ranges right now. So if I go on to something like the 4-hour chart, what you can actually see now is you can see this general expansive move to the upside, and these bullish order blocks are actually being respected. So what we'd like to see now is a move above these highs at 4.7. Once we get a break of structure around 4.7, I'm going to be looking to buy on any retest of any order block that's created here, or potentially on any mitigation candle. But as a whole, for copper prices, I do see a general consolidation in the short term, but the threat of copper prices actually breaking out is getting increasingly more likely, especially with the tensions around Ukraine and Russia. So make sure you look out for that. So that's it for my gold price forecast. I hope everyone's enjoyed this video. Make sure you like and subscribe to the channel. Drop any comments in the comment section as well, guys. It does help. I like to know where you think copper prices are going. It's quite a difficult market to predict at the moment, but there is a wider commodity rally going on at the moment. So maybe we're just going to start to see a move up towards that 5 level. So yeah, everyone has a great trading day, and I'll catch you all for the next forecast video. Cheers.